We didn't, but we're live anyway. Bullshit now.
Okay.
Hello, everybody. Welcome to episode 3, SoFi Weekly. We have like 2 minutes till we officially start. So all of us here are going to tweet this really quickly. You can also tweet it out if you're on Twitter. Let everyone know. Let your girlfriend know. Let your mom know. Let your dad know. Let your best friend from high school.
You don't have friends, share it on Reddit.
Share it on Reddit. Because the SoFi Weekly is happening now. And we also have a big weekly this week because we have earnings next week, November 2nd. I'll be live streaming it on this channel, so I'll be going through it. And I think Riley will join me. Maybe Tannor or Tevis can join me as well, but we'll see. It'll be fun to talk about SoFi earnings and see what happens. So in this episode, we're going to talk about expectations that we have. Some news about Galileo, some stuff around cyberbanks, and a bunch of other different topics. So I think let's start off with that top line. Q3 earnings, November 2nd. Riley, what are you thinking? How do you think it's going to go?
I'm going to capture that and throw it over to Tannor.
I was going to do that, but I know Tannor has a lot to say. Tannor, you go.
Dude, let Tannor go. Let him go.
What, with Q3, you mean?
Yeah.
Yeah, what do you think?
Sorry, I'm tweeting, guys. I've got a really loud
I think it's going to be good.
I'm trying to type really slow so it doesn't pick up. Q3 is going to be interesting. I think the real big debate is whether or not Lending Club, which is a big competitor to us, is, showing us a little bit of worrisome sides in terms of guidance. Okay. Pretty much Lending Club came out and they said that, their originations are slowing down for Q4, but they're also saying that it's because of macro headwinds and they just really don't want to be, putting a lot of money out in an environment like this, but they'll have to see. Right. So I don't know. Is SoFi going to have the same approach? I mean, who knows? SoFi has gone above and beyond what the normal market has said every single quarter. And we've even gone above expectations. So it's something that is worrisome. Analysts are expecting that we have a beat this quarter, but that doesn't say anything about the guide for next quarter. And you can have, amazing companies that do great numbers across the board, but they don't expect great numbers next quarter, and that can crash the stock, right? So it can't even be like, you play it for the quarter and then get out or something like this. I'm a very patient investor. I don't try to trade at all. But that won't even work even with future expectations.
Do you think even if we do well, we saw obviously Meta, Amazon, Google tank, Apple's the only one that survived this week. Do you think even if they do well, the macro still, they're not going to do phenomenal probably, which means if that's the case, the macro is just not going to respect it?
If you look at the past couple of quarters, SoFi has, gone up 30% by beating earnings the next day. Amazing spike into the air. And then the following weeks drop to new lows. So who knows, And the truth is, if we're looking at this from a Warren Buffett approach, we should be excited about that. We should be excited that the stock is crashing down. It doesn't worry about or at least I don't worry about if Apple or Amazon or any of these companies are pulling us down. They're not in our sector. I'm not worried about this. All I'm worried about is that SoFi's growth is good and that in the long term, we're growing in a steady environment. Whether there's headwinds right now, whether through student loans or from, hiring or hired interest rates, that doesn't matter to me because I know digital banking is going to be a forward-looking market, as well as their tech platform for, API-centric issuer processing for payment networks. So yeah, I'm still super excited, and I just hope that we beat on members and products. Everything else, would be cherries on top. But I'm here for the long term.
Okay, Tevis, your thoughts on Q3?
I think SoFi has a history of sort of being very conservative in terms of their numbers. And the flip side of that is that they raise guidance consistently. I think for the last 3 quarters reportings, they've raised guidance. And so I don't see that trend really changing for any major reason. I think the guidance, like Tannor was saying, is going to be the main catalyst for the stock to bounce up. And look, I mean, we've seen that there's a lot of companies that do well, but the stock doesn't respond. Yeah, sure. SoFi might fade away over the next couple of weeks after earnings, but on the earnings day, like last earnings, they popped from 6 to 850, something like that. and they have big runs because the stock has a really high short interest as well, and it's just beaten up. And so whenever SoFi responds great numbers and they raise their guidance, I just think it's further reminder of the company still executing on that mission. And I think a lot of that is experience from the management team who sets expectations conservatively to allow themselves ample sort of margin of safety to beat those estimates. So I'm bullish going into the earnings. It's going to be interesting to see how this time shift is going to affect them as well. I think it's net going to end up being a positive. And with regards to the big tech, I mean, they're done. Like they're over.
done.
No. I mean, big tech earnings are completed because of Amazon and Apple reported.
He's like, yeah, these $1 trillion companies. SoFi is going to be a quadrillion-dollar company.
I just mean they're behind us by the time that SoFi reports earnings, right? And so I think the market has an opportunity to digest the big tech earnings. And next week, I don't know who's reporting with SoFi, but on Tuesday morning, Wednesday morning, whenever it is, Tuesday morning, I think it should be fine because it's not on like big tech week, essentially.
Yeah.
You know what? There are a couple really interesting things that I'm going to be looking out for. Like I think I want to see credit card numbers. That number is going to be really, really interesting. If we're going to have a little bit of a bear case, and I know that nobody likes to know that the stock that they're holding did something, less than absolutely amazing. But where SoFi sort of messed up last quarter was in credit cards. The numbers came in way lower than what I was expecting. Across the board, it was a record-shattering amount of new credit cards that were signed up across the board for all banks, everyone across the board, okay? Visa, MasterCard, they had amazing quarters. But SoFi didn't even have their best quarter. It was like the largest amount of signups in credit card history, but yet SoFi, it wasn't even their highest quarter for credit cards. And the growth rate has been slowing, but that wasn't the quarter to sort of slow down on credit card growth, and neither is this quarter. Q3 is going to, or should be, amazing whenever it comes to credit card signups. We'll have to see. That I'm really excited about. There's another product that SoFi has that no one really talks about, and it should be talked about. It's an amazing service, SoFi at Work. Okay, SoFi at Work is sort of where we make company benefits programs for both retirement accounts and sort of benefits packages, insurance, everything like this. And our numbers for that are growing like crazy. And that's also what I'm really, really excited for. So there's a couple numbers in different markets that maybe don't get enough love. People sort of just worry about their personal lending side, but there's a lot of, different products that SoFi has that I'm really looking forward to seeing the numbers. Credit cards, SoFi at Work. So we have a partnership with Pagaya, okay, which we actually refer loans out to for people that don't have high enough credit scores for us. That number, I'm so excited to see. Obviously, we're going to keep you guys updated. What is it going to be next week that we're going to be able to show off all those numbers. I'll have it all charted out for you guys. It'll be a really, really good time, I think, regardless of, if certain numbers go up or down or whatever. I mean, really what's going to hold up the stock is personal loans, Galileo, and, that's pretty much going to be it.
Yeah, hopefully some guidance as well on, what their expectations are with the student loan refinancing coming back. Maybe that might be a Q4 thing for their renewed 2023 guidance, since we're just reporting Q3. But hopefully we get some word out of that for Noto. And then obviously the wild cards are going to be if we get some word on, buy now, pay later or options trading or something like that from a catalyst perspective. But, I think the two big pillars are going to be either the loans segment, which is a really macro thing in terms of what does the environment look like from a lending rate perspective, and then the credit segment, like Tannor was saying, in terms of, okay, what does that lending segment look like, the credit card segment look like from a macro perspective as well. And so there's two layers really that I'm looking for SoFi. Obviously, number one, looking for the company to show me a distinction on the macro, if they're relatively strong or not. And then the second layer is SoFi compared to competitors like Lending Club and others to see the relative strength that it might have or not have over a competitor, right? So there's the macro layer, which is economy sucks, therefore everybody's going to get hurt. And then there's a second layer to say, okay, economy sucks, that's our baseline. How much more or how much less is SoFi going to get hurt than their competitors?
Okay.
Yeah.
Speaking of Galileo, we ended last week's podcast with Tannor saying there's a $200 trillion market opportunity. And a lot of people in the comments were like, did Tannor mean to say true trillion? What is he talking about?
No,
And
I mean
believe
200 trillion.
Yeah.
All right.
And
I don't mean the stock is going to grow by 200 trillion. Let me share my screen right now.
so let's get into Galileo's B2B opportunity and this $200 trillion market. Tannor, you can take it ahead.
This is the $200 trillion market. This is straight from Galileo's website, okay? Today, 50% of B2B payments still happen by check, which means that there's a $200 trillion opportunity for digital B2B payments over the next decade.
So B2B meaning like if I buy your software as a service, if I'm a company and you're selling me software, that's a B2B.
Business to business.
So 50% of those things that happen globally is I write you a check for that software.
Paper check, baby. That's it. Yeah, exactly.
Wow, I did not know
Not
that.
only with software, that's like business is like just paying for utility bills. It's like all like transactions just like across the board over businesses, even like mom and pop shops. Mostly I would think is the small businesses in America.
Yeah. And like seriously, it buying software is probably the like Riley said, probably not the most common reference. I'm sure that is maybe the other 50%, but it's the plumber going to get more of his pipes or wrenches or whatever. I mean, that stuff is done just cash, so either paper checks or whatever that can be transferred over. And embedded finance is going to be a big part of this, and virtual cards is going to be a big part of this as well. And Visa is even trying to push this incredibly hard, but we play a very big line in that chain. So, or a big chain in that line. So,
one thing I like about
$1 trillion sort of thing that I was talking about that I was leaking. Now, what does that actually translate into revenue for our company? We are not going to be the next, biggest company in the world. But what it could mean, because for example, last year, if I have my numbers correctly, we processed $54 billion. Galileo did $54 billion. Okay. Wow. Having this sort of massive new, by the way, whenever Galileo actually was acquired by Sofi, there was no B2B market. This was not a market that Galileo was ever going after. This is only since we actually had a bank charter. So now that we have a bank charter, we can actually go after this new total addressable market that should change the total valuation of this company in general. We'll get into the two companies that Sofi has, Galileo and Technisys. And both of these companies were purchased for about 1.2 billion and 1.1 billion respectively. But now, here, I can stop sharing. I mean, you get the point. But now with these two companies, now we can offer a service that both of them can come to market together. Doesn't that change the total valuation for these two companies together if both of them are cross-selling to each other and then also going to market with new companies that maybe they weren't able to go after before? And I've got a great piece for you guys whenever we jump into it. There's an amazing thing that happened. I leaked it on my latest video, but I'm willing to go through with it on you guys here. So before we get into that, any questions on that, total addressable market?
I think that one interesting thing about Galileo, it's really short. One thing about Galileo is they're actually working on gig economy payments. So like we're thinking about replacing checks. That's going to be a huge part of the moving into the future. But also as new like businesses like Uber present themselves where they need to pay people on a daily basis for like so-and-so hours worked. Like I remember the former CEO of Galileo, Clay Wilkes, he was in an interview, he was talking about like how do you pay a welder per weld that he does instead of like doing an hourly rate, because then they just waste their time. He wants to incentivize his workers. And I think Galileo is actually dabbling a little bit into that. So it's kind of cool how like companies are going to be able to build on top of Sofi in the future.
Yeah,
but
100%. I think Tevis, I don't know if you did you say that you looked into the newest product that they just recently came out with, by the way?
The Cyberbank?
Yes. Yeah. The Cyberbank digital as a service or whatever.
Yeah, I was looking at that, but first let me just talk on the 200 trillion, because I sort of want to play devil's advocate here a little bit, because 200 trillion is a massive number, and I'm just not sure like the feasibility of that amount, right? Because that's taking into account entire industries that are both enterprise, small merchant businesses, mom and pop shops, like everything. Like that is the same argument that Bitcoin might use to say, well, if we use 10% of all of the global transactions, we'd be at whatever $1 million per Bitcoin. And it just, there's a whole bunch of, number one, execution risk baked into that. But number two, it's just a little bit, it's really wishful thinking. And it's something that for that to happen, I'm not saying that 200 trillion is going to be captured. I'm saying if 1% of the 200 trillion is captured by SoFi, they're like the world's largest, one of the world's biggest financial institutions. But
so can I clarify something though?
Yeah.
So we already, that's processed dollars. So, for example, like I said, last year we processed like $54 billion. If it's like 20x our business. I mean, it really wouldn't change our valuation. Like it wouldn't make us one of the biggest financial institutions. Not even close. I'm sure Stripe is doing way more than 2 trillion, per year.
Yeah, but you would get a fee from that, right? Like SoFi would get a fee from all processed dollars.
Yeah. But that would probably that would probably be somewhere in the billions of revenue, not trillions.
Gotcha. Yeah. So once you actually boil it down to what is actually feasible minus competitors, and then what is the fee that SoFi actually gets from that? Yes, you'll have orders of magnitude on top of where we are today, but I think 200 trillion is like a massive number for people. I mean, at least for me, just to mentally digest. So it's really good that we put into context in terms of, okay, what does this actually mean for SoFi? Because it's a percentage on a percentage, basically.
Yeah.
If we're really thinking about the Amazon model, it's going to be like super low margins. If we want to beat everybody else, we're going to have to be the one bank that offers the best rate on your transactions. So like the company doesn't have to pay a lot. I mean, do you think that like if SoFi really goes for the Amazon like story, they're going to have to build the infrastructure so they can offer the cheapest product to all these people, and that's how we're going to scale, is by offering at really low margins.
Well, I think the Amazon model, and I don't know exactly what you're referring to, but I think it's a great example of, 20 years ago, back in, or even longer, 1999 or something like this, as Amazon was just starting to get up, for them to pitch the idea of, oh, we're going to make sure that we can actually capture all of this commerce market that's going to go to e-commerce, and people are like, that doesn't seem reasonable at all. Over a 20-year period, it starts to get more and more reasonable. Now, I say 200 trillion as a total addressable market. That's what they're pitching as a total addressable market, not that we're going to capture it all, or even that it's all going to go to digital payments. Maybe half of that goes to digital payments, and then it gets split amongst the top 10, players. But I think what's really important is that we're a business that's going after a insanely fast growing market, and that should only grow into the future. And then even these things that continue to put pressure on our dollar, like inflation, will even help our business going forward, right? The more volume that's getting processed through, payment providers like Visa or MasterCard actually makes the companies do better, right? So those sort of things make it a little bit of a hedge for an inflation. Obviously, SoFi is still prone to, getting hit by inflation because people don't really look at them as a technology platform. It's still like, I still see so much misinformation. People think they're a subprime bank. It's the opposite of what we are. But these are just really good things, knowing that we have a little bit of extra hedge in a market that maybe is hard to find a good security right now.
If we did capture 200 trillion though, that would be pretty cool, right?
Yeah.
What's the multiple on a company doing 200 trillion in revenue? Like, not
for
bad.
Sure.
200 trillion.
200 trillion. SoFi introduced a new product this week called Cyberbank. And it's really interesting. I'll have you go, Riley, to start off with it. What is Cyberbank? What are your thoughts on it, and how do you see it evolving?
Sure. Let me see if I could present this here.
Is it one of the links on the doc, or?
Yeah, I'd link to. Basically.
Okay, I got it. I'll share it. Yep.
Yeah. Link to that. Those bad instructions.
Can I just answer the question for Rizzy real quick?
Yeah, go ahead.
Yeah, go for it.
Subprime Bank is a bank that maybe offers loans or some sort of credit solution for people that don't have an optimal credit score. So usually under 650, something like this, if maybe when they were younger, they didn't pay their bills. So some companies will go after that. Capital One is probably the biggest institution that actually started doing that, I would say. Well, didn't start, but like they're really known for that. So go ahead.
So what you're looking at right here is how
Riley, maybe you want to go to the article first, and then we can go to this.
What article?
Why don't we play that video?
Well, yeah, we'll go to the video, but maybe we can just set it up with the article. I'll send it in the Twitter chat right now.
I mean Technisis's video. I don't mean my video.
Yeah, let's just all watch Tannor's videos.
Sit here, watch 18 minutes of my video.
Yeah, and dude, so I realized, so I watched your latest video, and you still refer to it as Technisis.
Yeah.
Tanner, you've got issues, bro. I don't know. We don't know what to tell you.
It's hard to break bad habits.
Is there a video? Oh no, this is just a PR. Okay.
Yeah, we can just start here and then go into the image
Yeah,
and the video.
Good idea.
Okay, so it says Cyberbank Digital seamlessly integrates with payments and digital banking services to support customers in novel ways that dramatically improve the customer experience. Cyberbank is a digital, robust end-to-end solution that empowers financial institutions and fintechs to create and deliver exceptional digital-first tailored customer journeys with the option to integrate conversational AI capabilities across all devices and apps. Interesting.
So yeah, so this is all of this kind of existed before this announcement. This was kind of Technisys top end product that they were offering. However, this is like the first time we've ever seen it ever even mentioned with the name Galileo ever. And so this just goes to show that, hey, Sofi, we're doing this. We're building that banking core. It's like the first kind of real news that we've actually had publicly about them actually working together, which is kind of cool. So basically, Technisys, there's two parts of Technisys. There's the back-end stuff that none of the consumers actually see, which is all the software that goes to run all the financial services you use with banks and all these different types of fintech companies. And then there's the top end that Technisys gives, which is like a really easy way to like make a banking experience on your phone or on a website. And it's like a tool that you can give to another company that they can use to build their own kind of financial products. And what this is a showing that Galileo and Technisys are working on that front end right now. Just the part of like putting your credit card number in and like having it stored, not really that specifically, but just that whole top end type of tech is what this is an announcement of. There's a lot of catchwords here that you could read it all day and I still scratch my head like, what are they saying? What are we doing? But yeah.
Can I bring up something to add to this?
Yeah.
I'll share my screen. So who is just sharing that screen really quick?
That was me. I was sharing it.
Could you just bring that up really quick? And then I'm going to go back and forth with you here.
Yep.
Sorry, bud. Okay, so there's going to be a couple points I just want to add to what Riley said. So conversational AI, this is a great piece that not a lot of people are talking about, and they don't actually use this word, but what they're talking about, let me see if I can share my screen, is Kona.
Oh, is it the company? Oh yeah, Connected. That's what they call it inside of Technisys. But is that the company that they bought for this tech?
Yeah. So Technisys bought this company, Kona, that has conversational AI as one of their selling features, as well as knowledge-based AI, and then know your client and anti-money laundering AI as well. So it's all financial services, chatbots to help with these services and past chatbots. It's really the conversational AI that they're selling right now as a feature with Technisys. But being Sofi, that we own Technisys, we also own Kona. So, Sofi is a member of, is one of the clients that Kona uses and vice versa. So I just wanted to show that's really what they're talking about with conversational AI. It's that we actually own this company. So it's a really good selling feature as well. And then if we go back, I know it's a lot, but maybe I'll just talk about it instead of having to just bring it up, is that what they also talk about is having a third-party marketplace for Technisys. So this is one of the things like Zoom or like Salesforce or like really any B2B sort of software service, is that there are other companies that will make apps that you can purchase through Technisys, like DocuSign, like Dropbox, like everything like this, right? So that you can end up adding that to your service as a financial institution. right? So not only do you have the base layer tools that Technisys is offering you, but then you also have all these additional services that maybe, other financial institutions can also sell. So that's sort of where you see in two parts here is extended system capabilities, up right where you were. Extended system capabilities, as well as the ones above it, but you're not using it. Yeah. So a couple things is that, you see I'm looking at adjust customer journeys and accelerate time to market, where I see third-party apps and services. So this is all built in. They have a built-in third-party, marketplace for apps that they can sell within this. So that's super, super exciting. And what's really, really cool, if we can just stay on this, is let me try to find it here. I forget exactly where it is. But yeah, they say get the latest features, functions without interruptions. Listen to this. Just let's read this out word for word. Change any business rule, process, or product definition without interruption to day-to-day operations. You can actually change things. I forget where it is in the writing here, but you can change things that before used to take months. You can do it in literal minutes. Oh, it's actually right above. Configure, reconfigure, and offer new financial products and services in minutes, not months. Okay. That's an amazing feature. You can change your system within this company or within your own, banking cores. Whenever you post it live, you can change, your interest rates on the fly. You can change the way your products work on the fly and post new products live as you're developing them, instead of having to wait for a, product specialist to come out and actually change these things like old institutions do. So it's really what you want to be if you're a new financial institution, or if you're a big player that also wants to play with the little guys. Like, to have this sort of service is what you need for fast action in a pretty quickly evolving, financial services industry.
And this is primarily in the B2B market, correct? The Cyberbank?
No, this is banking.
So this is for like fintech startups to be able to use this as their API.
Yes.
It's like B to B to C. It's like Amazon.
It's B to B to C.
A lot of consumers don't know what AWS is because the only people that use it are the ones that are providing services to the consumer.
So maybe we want to just jump into the video, because I imagine a lot of people watching are probably confused AF right now. And
I don't blame them. This is so difficult.
Of what Technisys even is, it's you're selling a banking core, and like you're practically selling Shopify, but banking like infrastructure. You're selling them the setup for digital banking.
Yeah,
I'm going to share it right now. So it's 1:22, and then Tevis can give us some more analysis on it. Here we go. So this is introducing Cyberbank from Technisys.
Cyberbank enables you to rapidly adapt to changing consumer behaviors and win with digital banking experiences that help you differentiate. Whether your business is retail, SME, corporate, or payments, Cyberbank can help kickstart your digital banking project in as little as 3 months. The platform is API-centric and has a microservices-based architecture, which means you get the structure you need and the flexibility you want. Cyberbank can be implemented as an end-to-end platform, enabling you to innovate from product definitions to customer engagement. You can also implement Cyberbank Core as a standalone solution, giving you the freedom to adapt the platform to your unique business needs. With Cyberbank Core, you can define new products and services based on a powerful combination of pre-built atomic services with ready-to-use definitions. And for banks looking to create a digital ecosystem and build exceptional customer experiences, there's Cyberbank Digital. The CX framework enables you to build responsive web experiences and mobile applications and deliver conversational banking. And staying compliant with regulations is easier with Cyberbank, so you can spend more time innovating. Are you ready to differentiate with Cyberbank?
Okay, so a lot of buzzwords there. Maybe we can just omit if you want to pull up that chart now, the diagram.
Yes.
So basically, at a high level, what this is talking about is that flexibility in terms of the tech platform that's enabled from Cyberbank. Okay, and that customization is all the way from the front of the stack to the back of the stack in terms of you have a user experience, or the UI, the user interface, i.e. what you see on the actual app, that's customizable. You can very easily reskin that differently. It's all user-centric, so focused on that user. But then the more important part that you may or may not have picked up there is it's API-centric, and it's microservices based. So what does that mean? Well, there's basically two ways that you can organize data. This is going into tech now, but super high level, guys. Basically, there's a monolith structure, which everything is meshed into one gigantic structure. Think of it like everything is all in one. And it's very difficult for it to be flexible if it's like that. So a lot of traditional legacy tech infrastructures are monoliths. And that means that you cannot customize them. You're not very flexible with them. And so what happened was, as companies started to see the need for scale, they moved to a microservices approach. And basically what microservices is, it breaks out that giant structure into smaller bite-sized isolated components or modules, right? And so let's say, okay, we're on YouTube right now, okay? Let's say the video function is an isolated module. Let's say the chat function is an isolated module. The search function is a module. The, whatever, the profile page is a module. In a monolithic structure, if one of these things gets overrun with traffic, the entire site goes down. But in a microservices approach, if let's say the chat gets overrun with bots, then what happens is you can allocate more data or more space or more resources to just that one function so that the site does not go down. And so all of a sudden, you're way more flexible. And so coming back to Cyberbank, in the context, an API-centric microservice approach just means that it's very flexible and it's out of the box. So this is like, it's Build-A-Bear for banks, right? You're basically just playing Legos.
I got a question.
Building your own bank. Yeah, shoot.
So Tevis, so when we think about like old banks and how their software is built and how Technisys is trying to build like the new bank, like you're saying it's the microservices that you would plug into the old bank aren't as efficient as how it would be for like Technisys. Having those microservices help like reduce the like flow of payments, or am I on the right like track? What do you think?
So basically what you're having is, and we actually have done this before in like my actual day job, if you want to transition, because a lot of old banks, they're monolithic structures. And so what happens is they'll crash very easily if they get a surge of volume. We saw this with for example, in Canada, they had, when COVID hit, the government websites started crashing when they started offering like checks to people. And why? Because everything is tied together. And so you'll get the volume that's isolated to one function of that website, entire thing comes down. So there's two ways you can fix it, okay? To answer your question, Riley. Number one is you can do a platform migration. So you start breaking down that gigantic structure and you start building isolated modules or components, right? And that takes a long time. Or you can go through the API route, which is what Galileo is offering, or Technisys is offering, where you can basically just do a request and you can go onto Technisys's tech solution, right? So basically when that request from the user comes in, it's not going to that giant monolith, it's going out again to Technisys. And so you're augmenting it, essentially not using it at all, which is much faster.
So if I were to bring in like an analogy to this, like trying to build on the old banks, if you're like a fintech company, is kind of like having like a power generator connected to a house, but it's like the connection is a USB cord. It's like there's no way you're going to get that much power through it. So it's like it's really limited when you want to like use it for specific functions. But what Technisys is making that like USB cord like a huge cord that can power a lot of things and do what you want.
Yeah, essentially Technisys is like a Swiss Army knife for a lot of the traditional banks. Like whatever problem you have, they have these modules that are all built in out of the box that you can just plug in and then it'll work because Technisys has that back-end infrastructure, right? And so you don't have to rely on the bank's legacy platforms anymore. And so this is where this idea of a cyberbank comes into play, right?
This is really interesting. And so this is going to be a subsidiary of Technisys, whatever you say it, offering to the market. And
got you.
Yeah.
I honestly think it's going to be their new product. They're not going to offer really anything but this. Obviously, they're going to have, they have really two products, but Galileo is going to be an integral part of Technisys going forward. I don't think they're going to offer it without it. And that's just personal in the way that I look at it. And I think personally, if we're going to get a little conspiratorial here and make it a little fun, I think they've already been selling this. I've seen so many things where they just came out with it now. I think they've already been selling this product. Vlad Teniev, I think that's how you say his name, right?
Yeah, Robinhood dude. Yeah.
Tevis.
He was already coming out saying that, they found a new partner to bring their infrastructure cloud native and these sorts of things. And it was right at around the time whenever we acquired Technisys. And then after this, maybe I can even share my screen because I said I was going to talk about this and then we never really did get around to it. I wonder what your guys' opinion is of the T. Rowe Price. This
can you explain who T. Rowe Price is?
Clients on October 17th or on October 18th. And this is really, really cool.
Who is T. Rowe Price? What do they do?
T. Rowe Price manages $1.7 trillion of assets under management.
That's not that impressive because SoFi is going after a $200 trillion market.
But it's assets under management. It's like we look at like BlackRock as being the biggest player on the market, holding $7 trillion or something, $7 or $8 trillion. T. Rowe Price holding 1.7 trillion. They're one of the biggest players on the market. Like they are huge. I'm in the financial sector or whatever. We sell a lot of T. Rowe Price. Like it's true. So
I love how everything is going to be so fucking small in comparison to this 200 trillion number that's now in the background. You understand that's like the global GDP is like that number.
Yeah, but it should be the GDP. It should be global GDP because that's processed transactions. So it literally should be very closely tied to global GDP. That's a great way.
We're not going to be. No way. SoFi is going to grab 200. It's impossible. Like we're going to get a section of that, but it's not like
a section of a section of a section.
I'll be happy.
Yeah, seriously. Real quick though, Tannor, is like I've seen so many partners that nobody talks about, like Samsung, T. Rowe Price, all these big companies that are kind of sponsoring or using SoFi's products, and it's kind of weird how like nobody's talking about it.
Yeah, and maybe I'll switch over later, but the same sort of on Galileo's website, they say that all of their clients put together have about a combined valuation of $150 billion. Okay, which pretty much means we're running with a bunch of small fish. We don't have a large institution that we're actually dealing with. Where whenever we look at T. Rowe Price, for example, that's a $25 billion company right there. That's a 16% increase in our client base, let's say. I mean, obviously, It's not a one-to-one ratio, but I like to look at that metric just to show, if we are going to go off combined valuations, we're doing pretty well. Now, can you throw that back up, Amit, real quick? If we're ready to talk about this, because this is quite cool. Okay. Now, there's two big institutions that they talk about. They talk about Galileo, and then they talk about, where is it? I think it's Bancorp Bank. Okay. Bancorp Bank is going to be the people that are actually holding the assets under management, and Galileo is going to be holding all of the transactions, or at least, being a player in that transaction space. Okay. But what it says here, this is super cool. Let's remind ourselves what Galileo even does. They process transactions. They play the role of the issuer processor. Okay. But let me find, if I got to bust out no, here it is. T. Rowe Price designed the app and algorithm, and Galileo Financial Technologies is providing the cloud-based digital platform. That's what we offer, and program management services to power the program. We don't offer that. We do not offer program management. Do you know who does offer program management? Technisys.
What is program?
Program management is who's going to be actually offering this service, who's going to be building the core processes of that service. Now, usually that's done by many different players on Visa's network, not Galileo. So, you need about 5 different processes to do this. And really, we should only be the issuer processor, the transaction part of that, not the program manager. Okay. We don't offer that solution. Technisys does, however. So I think they sort of gave us a little bit of insight saying that, I don't know whether this is going to be, maybe we can find some extra insight, or I'll try to dig whether this is cloud native or they slip up and say something like this, because there's really not a lot of players doing this, right? So it could give us some insight, or maybe they'll say it on the earnings call that T. Rowe Price was the first people to use this. This was only 3 days before they announced this new product. I'm sure they were offering it as a service. So hopefully, T. Rowe Price if not Robinhood was the first people a couple months ago, I would bet a lot of money to say that they are one of the first users of this new Technisys Galileo Together product, and that brings us.
I have a question.
So I'm excited.
Whenever Galileo and Technisys release a PR, it's basically a SoFi PR as well because we own them, right? Even if SoFi doesn't literally release the PR.
Yeah,
because
that's
it's
why you sort of have to
independent
follow
company.
both.
Well, yeah, it affects whatever Galileo and Technisys are doing is what SoFi's dream is. Like they're 100% focused on those two companies and building something all together in like one thing. So yeah, whatever they're doing, like that's the weird thing about SoFi is everybody thinks about SoFi and they think the personal student loan company, but like just right under the first shallow layer of what that company is Galileo Technisys, and 95% of people that know SoFi don't know what those two things are doing.
Well, yeah,
and this is where all like.
I feel like a part of that is on
Go
purpose
for it.
too, right? Like, because Galileo is a separate entity. Like, Galileo has their own CEO, they have their own C-suite, they have their own management team, and SoFi is a client to Galileo, just as they are the eventual owners. And so, the only time you really see Galileo's numbers is when SoFi reports quarterly earnings. Like, we're going to see them on Tuesday. But Galileo operates as a standalone for the most part in terms of their decision-making process. The only place where SoFi starts to play a part is in that long-term vision. Because they own them.
And I mean, I think that, sorry, let's read this out real quick.
Yeah, let's try to answer this question. Kathy Wood thinks Block will capture this market and not SoFi. Any thoughts on SoFi versus Block?
Well,
nope.
I mean, like, dude, this market we're talking about, we don't even know what it looks like.
$200 trillion.
Yeah.
And it's huge. Yeah. So like,
what are they actually thinking that we're going to, what are they going to capture that we're not? Do they mean digital banking, or are we still on the topic of Galileo and Technisys?
I think Block as a payments processing API infrastructure for crypto and payments. Like, I think that's why.
I think you're thinking of Stripe. Like, if he said Stripe, then that would be a different story. But Block, I don't really see it.
Yeah, I think there's a difference between sort of payment processors with the people that own, debit cards and credit cards versus, Block is trying to go after the e-commerce market with Square, and then Cash App is trying to go after the digital banking side that SoFi is going after, right? SoFi Bank and Cash App might compete directly, but it's not the same as sort of Square going after Galileo and Technisys. They would not even really cross paths, aside from people putting their Galileo cards onto a Squarespace, not Squarespace, but Square, website and buying something off of them or processing it through their payment solution. But we could both benefit, and we don't really intertwine there.
Okay. Speaking of some news that's also happened today, Twitter, Elon Musk has officially purchased it. He is now the chief twit of Twitter. Anthony Noto used to be the COO of Twitter, and the CEO Parag Agrawal walked away with about $60 million. Any thoughts on
walked away?
He was escorted out.
Do you mean escorted out?
Do you think they actually escorted? Like, he knew.
Okay, so this is the thing that fucking kills me, is this bias in the media, because half of the publications are like, Elon signed the paperwork, and Parag and Ned Siegel and everybody else in the exec team, I think 4 execs were in the HQ, they were all escorted out. And then you have CNBC and fucking Washington Post. They were like, oh, Elon took over, all the execs are leaving, as if they're like doing it in solidarity.
Yeah.
It's bullshit. Anyways.
Well, so here's my question. Anthony, Anthony Noto, do you think he would be proud of someone like Elon running the company, or he wouldn't like it?
I have a take on this. If nobody else wants to go.
Go ahead.
Go for it.
I think Noto and Elon would be on the same page, given the entire mission of what Elon is trying to achieve with the Twitter thing. There's a whole bunch. So I made a recent video on, what are a couple of moves that are coming next after this transition, based on tweets that Elon has put out since April, since the entire negotiation started. And he wants to integrate payments, like his whole PayPal background. He wants to integrate shopping. Like, he wants to make this like the everything app closer to WeChat, where people can do many, many things onto Twitter. And so I think that Twitter very soon is going to become our actual real competitor to Meta in terms of that eyeballs on page or market share that they're stealing, they're going to become a competitor to YouTube because he wants to reward content creators. I don't know how that's going to work out. But where I say that they're aligned with Noto is this aggregation of different services to create an all-in-one platform, because surprise, surprise, that's exactly what SoFi is, except it's for financial services products. SoFi has the lending side, SoFi has the B2B aspect. SoFi has the financial services aspects with their credit cards. They have, crypto. They have all of these different things. You're going to have options trading very soon. They have margin trading. And so this entire mantra, or this top level sort of thesis of having a user use one app instead of using 5 apps for all of their financial services needs, whether it is to check their car loan, their mortgage, or their crypto account, I think that meshes very well with the entire goal of what Elon is trying to do with Twitter with regards to having one app where users can access many parts of their life. And to some extent, I think this has been validated by the market. The market has been moving more towards this aggregation in terms of what apps they actually use or where they dedicate their leisure time, as opposed to, having 50 different apps on their phone. They only want to have 5.
One thing I want to add to what Tevis said real quick is this is actually really, really cool. Not a lot of people know is around 7 to 8 months ago, there's a person on Reddit called Bender9000, and he went through like the text code after an update and found out that SoFi, their team was actually experimenting with adding tweets into the app built in. So like you would go to a stock and you would see like popular tweets about the stock, or you would go through your banking application and underneath there'd be like a Rolodex of tweets you can go through based on like your linked Twitter. But there is actual code in the SoFi app right now that suggests that there's going to be some sort of Twitter integration in the future, which is kind of cool, because if that were to happen, it's just one step closer to make maybe one day doing something.
Yeah, and look at SoFi Hong Kong, right? We talked about this before. I don't know if on this pod or just between us, but SoFi Hong Kong basically has a similar offering where it's that content creation plus that financial investing aspect, or that group investing, similar to what StockTwits is or public.com, right?
A social side.
Exactly, right? And so we can see natural synergies there. So if they do,
so Twitter's buying SoFi. That's your argument.
Hey man, I think Elon has enough fucking money to buy SoFi if he wanted to.
That's so interesting, man. I agree with you on the everything app idea, because there was someone tweeted that Twitter should have a YouTube competitor. Elon put an emoji, like a winking face, underneath it this week. He's obviously had a lot of ideas around payments.
Really?
Yeah, someone was like, hey, why do I tweet my links to YouTube videos? Why can't I just put them on Twitter?
Yeah. Tell me I'm wrong, but all this leads to AI. Like he's so focused on AI, he's going to do something with AI and Twitter where it's going to be like next level. We're going to start seeing like Twitter accounts that are bots that are led by Elon Musk, and they're all going to be AI. I don't know, dude. Or it's going to be like, I don't know. What do y'all think? Do you think that's what it is? Why is he buying Twitter?
A lot of it, Riley, and just in my opinion, is going to be built on the backs of that creator economy. So if Elon, number one, starts creating longer form tweets, which are already being augmented with threads, he just wants to make that process easier. If he starts to promote actual, let's say I want to make a YouTube video, and instead of posting it on YouTube, I get a better split as a creator on Twitter, then I'm more incentivized to start bringing in people. That flywheel starts rolling in terms of eyeballs, right? In terms of shares, in terms of likes. And all of a sudden, Twitter becomes this place where people flock to. And so I really think that for Twitter as a social media company, the secret sauce of their growth is really the incentivization of creators. And I think that's where he's going to focus on first. Integrating payments, integrating shopping. Think of what is at the heart of all of that, right? Creators creating content. Yep. As you create content, you have this influencer status, and you can do shopping, you know, similar to what YouTube has with shops. You can do payments, link out to a Patreon, link out to a Linktree, whatever you have it. So I really do think that creators are at the heart of this move, which is really interesting to see.
That's a great point.
Influencers. micro influencers. Yeah.
One thing on the docket was Anthony Noto's salary. Tannor, you want to talk about that?
Yeah, I'll loop the two in. So let's just look at Twitter and his salary at the same time, because some people think Noto is making
interesting
bank. Okay. And one thing that
Probably.
a lot I understand that there's a lot of emits chat here and some SoFi followers, and it's a mix of two. So the SoFi followers will know that Anthony Noto is notorious for insider buying of his own. Well, not illegal insider buying, but he's buying a lot of shares of his own company. Okay. He buys a lot of shares of SoFi. Lately, though, this has really gone back. Okay. He's not been buying a lot of shares. Personally, my opinion is the guy's not made out of money. Okay. And people go, oh, well, he's made $100 million in stock options. Yeah, but there's SoFi stock options. He's not selling SoFi to buy SoFi. Like, so it's silly. That's just because the company had went public. I mean, the same year that he made 100 million, Vlad Tenev of a company almost the same size as us for Robinhood, he made like $800 million. So this is just this state that we're in. Okay. But, so what was I going to say there? So Anthony Noto, his real salary is about $1.4 million a year. That's before tax. Okay. Not a whole lot of room once you see his mansion and everything like this to go out and buy as many shares as he possibly can. But now that Elon Musk has actually bought Twitter, okay, like you said, Anthony Noto used to be the COO. He's going to make a lot of money.
How many shares did he
share
have?
for you guys exactly how much? If you could share my screen there.
I'm going to guess it's like 400 million.
No, $125 million.
What?
Is how much he's gonna make. Yeah.
Wait, what was his cost average on those?
It doesn't matter. Well, I don't know how much he actually bought, but what's happening is that, he's going to end up getting paid out 125 million. So whatever his cost basis is, I don't know, but he's going to have $125 million of liquid assets, because that's the price that Elon Musk bought it out, was like 54.20.
Basically, Anthony Noto is going to be loading up the fucking wagon on SoFi stock soon.
Maybe, potentially.
Maybe,
hopefully.
Maybe not as well.
But now this is
buying Goldman Sachs at 6.
Yeah, exactly.
Yeah. But you know what? I think he just doesn't have a lot of access to liquidity right now. Yes, he made bank, but he got a lot of money in SoFi shares. No one's selling SoFi shares to buy SoFi shares. Doesn't make any sense. He doesn't make like a ton of money in cash. This is cash. Okay. So might be quite interesting to now start following what Anthony Noto does on the insider buying side, because he's going to be rich. I don't know when the actual payout and everything like this actually happens.
Here's the question.
But, yeah, interesting for sure.
I'm going to ask each of you what's the first thing you would do with $125 million, but you have literally 10 seconds to answer. You can't think. Riley, first thing you would do.
Dude, oh my God.
Gut reaction.
I would start a business and invest like 50% of it.
Okay, that was the most boring answer.
Never have to work.
Tannor, what would you
Yeah, dude, that was not my answer at all. Yacht, I'll never see you guys again. Bye.
You just stole mine. I was gonna say, look at yachts.
Put in the chat. What would you do? 125 million. That's a lot of money.
I'm not even a boat person. I'd probably like get boat sick or something, or seasick.
I would just go all in YOLO options for earnings play. Let's go.
I would put all of it into Meta. I would be like,
shut the fuck up. Really?
No, I thought them. Did any of you guys purchase any big tech this week on their falls? Any orders go through? No.
I'm a weird person. I don't really talk about my trades. I know people don't like that, but yeah, I don't like external peer pressure on what I'm doing with my own portfolio. So yeah, it's a weird thought for people, but
yeah,
it's your own portfolio.
Holdings, is that it?
What?
So you have some weird holdings. Is that it?
No, it's not even that. I find, it might've been Jack Bogle or one of these guys, but he just said, you know what? Or, you know who it was? It was, Monash, Pabrai. Is that how you say it? I think he said that. It's just don't tell anyone your trades. It's just going to put external pressure on what you're doing. So I want to talk about stocks that people are interested in, and I can give knowledgeable things of what my opinions are, and I'll be as honest as I possibly can about that. But I'm not telling you to buy these stocks, sell these stocks, or anything. It's just what I'm seeing. This is what I like. But on the stocks that no one cares to hear about, I don't care to share.
Okay. Last thing let's talk about is options from SoFi. Leaked image Looks like we're getting options. Riley, what do you think?
Yeah. So again, like I said earlier, Binger 9000 goes through. He's on Reddit. He goes through the text and he found a lot of like options code. Like this is it is suggesting that options is closer than we think. I'm not sure. Robinhood in the early days had a lot of problems with fraud when it came to options. A lot of people doing some sketchy stuff, namely Wall Street bets. But SoFi, it looks as though they're about to release this. This is some sort of screenshot from inside, like the code after it was ran or something inside the code for sure. But yeah, it looks really close. I don't know. Tanner, you think it's going to be next year? And then Binder,
you know what?
On Reddit,
seeing this has got me excited.
Okay.
Well, so if you just think of this from like, okay, let's logic from reason. At what step of the process would this agreement be drafted up? And I would imagine it's towards the end of the process, right? Or would you guys think it's towards? Because if it's towards the end of the process, then the mere fact that this thing exists would mean that we're coming up to a close on options being released.
Yeah. Do you think this is the start of it? I think because they've already picked out their
they already have like the
they would go
menus
through
made.
Apex. I mean, that's pretty clear. But just in the sheer fact that they even wrote that out, I think means that they already have the connections in place. I think it's closer to the end than the beginning, if that's what I'm going to say. Like,
yeah, agreed.
That has actually got me excited because whoever they're leaking that out to, or whomever's seeing it, it could be beta testers, it could be something along these lines. It's probably closer than we think, but it's also about to be November, guys. So like, I don't know if it is going to be end of year, but close to it, I think.
2 months. and SoFi Plus should be out, and I haven't got it. It's I've heard that the representatives on the phone say that it should be done by the end of this month, but I haven't gotten it. So yeah, I've got 5 days.
Yeah. Now options on the app would absolutely be huge. And also if they can fix the lag on the app, that would be nice. That's the one thing, bro. When I use the app, I'm like, why is it lagging? Just don't lag.
But you know what? Let's wait to see what the app,
center.
How it feels whenever it's on Technisys,
Yeah.
Then it's going to get really good. And also there's a big issue. What I also think, tell me, I'm just thinking about this right now. So there's a huge issue with, Riley, help me out here, man. Zillow or Zelly. Is that what it is?
Zell.
I'm not American, so Zell. I don't know. I'm Canadian, so I've never used it.
Zelly.
Man said Zillow, bro. This man fucking
Zillow. Yeah. We've got Zillow here, so
there is a big issue with Zillow.
It's like, what are we talking about? Okay, so
but so the reason why, tell me if I'm wrong, Riley, is that the reason why Zell is not using SoFi is that we have some really weird account numbers.
Sorry, hold on. What, Zelle is basically a PayPal competitor?
No, so basically all the old banks said, hey, all these little fintech companies are trying to be our transportation vehicle for payments. Let's all just make one together. So all the big banks in America decided to make Zelle, and they built it all into their apps, spent a lot of money on it. So now you don't have to get PayPal, or you don't have to go to Cash App.
It's pretty seamless. It works well.
It works well. Here's the thing, though. What Tanner said was it might be account numbers, but no, they're about a year ago, somebody contacted Zelle, and Zelle sent them an email about why they couldn't integrate with SoFi just yet. And the thing was transaction IDs. And this is before they were a bank. So they were moving into a bank. And so, and they promised that you would keep your account number, which was true. But account numbers and transaction IDs, it's too weird to integrate. So again, whenever we get this below the glass figured out, which we don't even know because they're not going to tell us, then we're going to have Zelle. And that's going to be another big factor that people are going to love SoFi.
Yeah. Who knows once we integrate over to Technisys, right? That if we are redoing our entire core and everything and just rebuilding the infrastructure, I'm sure we get that fixed. If we're already in the back end trying to fix up our system, which will hopefully make the app less laggy because it won't have to connect to 4 different systems to get, that seamless integrated page all together, right? So pretty much the way it works also, if I'm going to just touch on Technisys as well, is that it's going to make one multi-product core. which will allow for deposit and checkings, which right now for SoFi, deposit and checkings is one core. Lending is another core. Okay. And by core, I mean, we are dealing with a partner. Think of it like, Square or like Spot or Shopify. Like these are the people that are doing the back end for our systems. Now they're not actually those people. They're smart partners that are dealing in banking infrastructure, but think of it that way if that's going to help. Okay. We have one for deposit and checking. We have one for lending. We've got one for credit cards. And then we have one for the investing brokerage background. Okay. That's a lot of different players. And it's also probably, maybe Tevis can help us out from a product design point, is probably a lot more information than just going from one seamless partner that probably works a lot faster. So Technisys will probably make this a more efficient app to use. And that's probably why they're not working on any bug fixes or anything like this, is that they just know in a little bit that this will all be fixed. So why not just put all your powers into, member acquisition, everything like this, and then we'll get it all figured out in a couple months.
Yeah. And look, I think with regards to the cores, I know we're coming up to the end, but with regards to the cores, I think the sum of the whole is more than, all the parts, because of the integrations that they can do that they can't necessarily do if they're APIing out to like a third party. So the more cores that essentially that they bring in-house, the more of these little acquisitions that they have over the years, then the aggregate result or byproduct is going to be so much better. And look, just to wrap up this video, because I know Amit has to go to Palantir weekly, Tuesday morning is earnings. I don't know that we will be here for earnings because it's at 8 a.m. and I don't want to wake up for that.
I'll be here if anyone wants to join.
I'll join you, buddy.
I'm tentative.
So
we'll stream whenever Noto starts speaking. I don't know when he starts talking, so I'll find the time. Maybe it's 8:30. I don't know, but we'll check it out.
So you're live streaming, Amit?
I'll be live streaming it. I'll be doing it.
Regardless, we'll be talking about it next Friday. That's for damn sure.
So yeah, make sure to tune into that. And I guess if all three of you guys are going to go, then I might as well just wake up and go. I'll be cranky though. I can't promise I'll be happy about it. But yeah, right. Tuesday's earnings. Don't miss out.
Awesome stuff. We got to end it here. Thank you, everybody. See you on Tuesday, this channel for earnings, and next week to analyze earnings. Bye, everybody.
See you.
Bye.